price forecasts. Silver US dollar hovers at $74 a ounce with bullish momentum fading.
US dollar Swiss franc treads water around 7,900, with markets awaiting news from Iran.
Australian dollar US dollar's recovery halts at 0.7060 as Trump vows to close Hormuz. Pi Network price forecast. PI extends gradual downtrend amid risk-off markets, lack of catalysts.
US dollar, gradual reserve erosion and sanctions-driven shifts. Commerzbank.
India inflation rises to 3.4%. Slovak construction output rebounds o 0.2%.
ECB's Vujicic. Energy prices still very close to baseline scenario.
Hey, good morning. Bing, 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 bing. Bing, 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 bing goes the phone. Well, I guess we got to start. "58 seconds, Bubba." "34 seconds." All right, gotta get going. Welcome to Forex.Today, the community of more than 21,000 foreign exchange traders. We gather here to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go!
Canada. Carney Majority Prospects and Fiscal Outlook. TD Securities.
Whoa! Yeah, that's right. I remember my wife said, "Oh yeah, you forgot to comb your hair." And I'm like, I'll do it later. Anyways, hey, the world's too crazy to be worried about your hair. I didn't even do it. I'm a mess. Hey man, it's a risky day, huh? Yeah. So anyways, I hope you traded the Asia Open. Yep. So anywho, we got a lot to do, and you probably got the blockade on your mind, but don't forget we have earnings season. Earnings start today. I think did Goldie already? Goldman Sachs, did they post yet? I know that's coming out. But anywho, don't forget it's earnings season. It's easy to get distracted by, what's going on over there? Yeah, well, that is important, but what's over here is also important. So you have to really look at the markets holistically, which we will do. And we are using a combination of TRADARS and Trader's Way. TRADARS for data analytics. It's really more of, yes, it's data analytics, but really think of it as a framework of your methodology. A framework. It's a decision-making process so that you make better decisions with the hopes of having better trades. Not more trades, but trades that last longer or address current market conditions better. And then you have to be able to execute, and that's where Trader's Way comes in, right? Cool. I want to show you, I updated the SITREP report over the weekend. Check this out. Good morning. Let us get you up to speed on the shifting economic landscape for the European session. The market is currently maintaining a risk-on posture, though this sentiment is being tested by a sharp spike in volatility. Rising U.S. 10-year yields to 4.317% are reinforcing U.S. dollar dominance, while energy-led inflation fears create a bifurcated environment for global indices. Biggest movers right now, Bitcoin and silver are down. VIX, WTI crude oil, and Brent crude oil are up. My volume is not so good. Yeah, so look what I did over the weekend. I taught Aiden how to read the headline news. So, Aiden pulls economic data from the central banks around the world. Right, and government agencies. Great. We also read how the market is moving in different subcomponents of the global markets, whether it's bonds or volatility or equities or Forex or crypto, right? So we watch all of that, of course, and then we can put that in and correlate things, and we like how is the market moving relative to oil, relative to VIX? Is there a relationship between VIX and oil, and all this kind of stuff, right? And then we do technical analysis, short, medium, and long term. And then we try to line everything up. Yeah. Good. But then over the weekend, I'm like, hey, we, the peace talks, if you will, quote unquote, failed. Now, I don't think they failed. We can deal with that in a second. But the media is reporting that it was a complete failure, right? Okay, great. Well, that hasn't shown up in economic data. It hasn't shown up in market sentiment because the markets were closed, so on and so forth. It didn't show up in the charts because the charts were closed, yet we had information. So I taught Aiden how to read our headline radar and comprehend it, and then add it to its analysis. So even though it was Sunday and I'm smoking a cigar and I'm watching golf and I'm trading, I'm also teaching Aiden. Or actually, in the beginning of Sunday, I was preparing to trade, and then I realized, hey, he's missing this data, and I'd like to put that in there. And so he did, which was really interesting. And he actually, so I don't think did he even say it here? The market is currently moving in a risk on. Okay, so he didn't mention it in this report, which is interesting because he's been talking about it at least last night. By the way, he updates twice as much now, so he keeps reading the news and all that. But what he was saying last night is he's like, there's still a risk on posture because he's looking at technicals, he's looking at fundamentals and all that kind of stuff. However, the other thing is he said, but the U.S. embargo of the Strait of Hormuz could change things. And I'm like, oh my God, I didn't tell him to do that. I just said, do scenario analysis by reading the news, not just the economic data, not just the charts, not just the sentiment, but actually just read the news and stay up to date. And then so that was cool. He didn't do it here, but he'll probably do it later. It's AI, which is awesome. So I teach him how to think, but I don't tell him what to say. But then we do a scenario analysis, and this is actually pretty cool because it's changed since the last time I've seen it. Bull case, base case, bear case. Catalyst, reopening of the U.S.-Iran diplomatic channels or clarification on Hormuz transit. See? Isn't that awesome? He's also thinking ahead. So I've been teaching him a lot how to use economic events in the future, not just in the past, and the news. So both of them are the same thing. Like, it's not quite sentiment and it's not quite economic data and it's not quite news. It's like, okay, all of that's important, but also the human psyche is worried about the Straits of Hormuz, and we are worried about high inflation coming into the PPI later in the week. And dude, he's doing all of this because now he's reading all of that. And now he's creating scenarios for you. So it's not a base case here. It's not likely to happen, 20% chance. But, you know, oil tankers steer clear of Hormuz. Blah, 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 blah. You know, if these things happen, then it could be a bear case, right? So very interesting, isn't it? So that's a massive improvement. So he can adjust the outlook even if the markets are closed. EuroCAD. Well, let's jump to that. We have a question here. Can you help me analyze EuroCAD? All right, well, I'll just jump here. I'll go to the index. I'll change the view. So we have split panel now. Okay, EuroCAD. It was there for a second. It's not a good trade. There it is again. It's not a good trade. Okay, so can I help you analyze EuroCAD? There's no reason right now to do it. So it's pretty much a mirage. Whatever you see is a mirage, and you're missing the most obvious trades. Okay? But also the basic concept of risk off. But I guess what you're trying to do is what? Europe is going to try to buy Canadian oil? That's a stretch. Yeah, I don't know. Today it doesn't make sense. Let's go further out. It's not very good. So over the last 7 days, EuroCAD has moved up 0.82. But Kiwi dollar's gone up 2.5. Kiwi yen has gone up 2.5. Aussie dollar's gone up 2.33. Aussie yen has gone up 2.33. Pound dollar's gone up 2%. Pound yen has gone up 2%. And you want to trade EuroCAD. It doesn't make any sense. So, helping you analyze, what I'm trying to show you here is in just a handful of seconds, just in a few seconds, I can tell you you're not even looking at the right thing. And to get to that takes seconds. So you should be looking at these things. Okay, that's over the week. This is what's happening right now. Okay. And look how it's updating like in real time. Look at this. So we're organizing them like this one's very bearish. This one's very bullish. Okay. These are your best opportunities. So we organize them as sort of active and then no edge. It's not quite what I asked them to do, but you might want to do it this way. Look at it. Look at it updating. Dude, you see it? So, as an example, you might know Australia is a high beta. So, if we are rolling into risk off, you're probably selling the Aussie and the Kiwi, right? And so that may be what's happening, but we skipped ahead. So like the question is Euro CAD, and I'm like, that, I just want to pop that up, like, obviously not looking at the right direction. CAD is neutral. Euro is slightly bullish, right? It's not right. But you want to jump over here more quickly and say, well, it's risk off. Why would you look at EuroCAD? Once again, just this basic information is like, you're looking at the wrong thing. Now, you might see on your EuroCAD, you might see a MACD or a pattern or a moving average crossover. And that's the part that I believe whatever is attracting your eye is a mirage. You're looking and seeing, you're looking at the wrong thing and seeing things to do. Meanwhile, you're missing the whole point, right? Like you're missing big moves by looking at the wrong thing. Now, when we back up a little bit, risk off. Okay, today we have a risk off. Now, maybe this changes and maybe your EuroCAD changes. Okay, true. I don't know the future. But when you start the day and it is a risk off day, even if the week is risk on, something happened over the weekend to create risk off. Now, we know what that is, but nonetheless, knowing this and having measured this in, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So we looked at 15 variables, each with a customized weight based on its importance. We measure all of that, the change since Friday's close, and you look at this and you would never think EuroCAD. So I hope that helps you. The only thing I can tell you is you're totally missing market sentiment and you're totally missing relative price changes, and you're completely focused on the exact wrong currency. Unless you got amazing predictive abilities on how it's going to behave in the future. I'm not saying any of that. I'm just saying what happened over the weekend, what are the market conditions right now, and then that EuroCAD analysis I started with is what's happening right this second on the charts. Right now. Like right now. But that takes 10 times. It, like this, takes a lot of calculations. I'll just put it this way. Depends on how you like to look at it. This one's pretty good. I don't like the colors. This one's pretty nice. So if you're looking at this, it's euro versus all the G10. Dollar versus the G10. Swissy. These are all synthetic. Okay, this isn't pulled from some other godforsaken database on some godforsaken signal service. No. These are mathematically calculated in our back end. So Aiden is analyzing all the euro charts, all the pound charts, all the CAD charts, and we're looking at the percentage change. So basically, this is how I first started to trade 25 years ago in Forex. I did this manually. So now I have Aiden do it manually, and Euro CAD is a terrible trade right now. I don't know what it'll be in 5 hours, but I can tell you right now, it's a low probability trade. Now, things can change in sentiment. Things can change, whatever. Things can change, but I know what is. That is not good. Right? Now, Richard says to me, Euro is weak and CAD is weak. Well, Euro is up 0.124% versus 5 other currencies. So, it's not weak. No, that's just now, though. That's now. Okay? Now, if you go further out, Euro's still actually not that weak, Richard. If you go out 30 days, Euro is actually quite strong. And this is why TRADARS is so important, because things do change. I'm not saying Richard can't be a bear on Euro. What I'm saying is that's not what's happening on the charts. But maybe later, hey, Richard, maybe later Euro weakens and that provides a nice trade. And maybe that's market conditions change, maybe economic conditions change, maybe seasonal conditions change, the war conditions change, and the conditions for the war between the Ukraine and Russia changes. Yeah. I mean, these things will all have an impact. But I can't prove it quantitatively right now. Quantitatively, that ain't right. Not that it won't be. And that's, to me, Richard, as I've always said, it's not survival of the fittest that matter. It's survival of the fastest to adapt to market conditions. So if I was going to be a bear on Euro, I just wouldn't be a bear now. But I can sit and wait and ambush. I can go at it like a ninja and say, short it today? No. Or at least not now. Maybe later today. Well, this week and this month, it's still showing strength. Okay. Cool. All right. Okay. Now, actually, so let's go back. Let's go back. Let me go back. I can see one thing where how I say in English. I was a bit wrong. If you are looking longer term. Okay, so I looked at now, today, like right this second. I looked at weekly, and the Euro CAD was not that great. Now, right, I don't know the time frame for a Luho TV, a Hulo TV, on the Euro CAD. Now, if you are long term, Euro CAD makes sense, you see. It's just not now. Okay, long term, sure. Today, this week, I don't see it yet. Okay? So if you're a position trader, stay ready, stay alert, just not now. Cool. Can you guys see it changing in real time? Dude. It's good, right? It's good. That's good, yeah. Anyways, let's get an update on the headlines.
Oil. Prices surge on Hormuz blockade threat. ING.
Fed on hold as energy shock lifts inflation. Deutsche Bank. Euro, US dollar price. Forecast recovery halts near 50%, FIBO retracement at 1.750.
US dollar Canadian dollar holds flat as surging oil. Hawkish Fed expectations offset.
Euro US dollar consolidates near 1.1700 ahead of Trump's Hormuz blockade. Gold prices fall as Iran-driven inflation worries dent rate cut bets.
Canada. Carney majority prospects and fiscal outlook. TD Securities. Silver price forecasts. Silver US dollar hovers at $74 a ounce with bullish momentum fading.
Cool Modi, coolio. So we did the risk, the spike. Yeah. All right. We need to go through this. What's not on the calendar, because remember, this is an economic calendar, are the earnings. And the earnings coming out are hugely important. It's part of our seasonality. Banks have probably done okay. You know, as far as, how you say in English, in regards to the war in Iran, banks have probably done okay. And they're probably going to say the consumer is still resilient. Okay. So just remember, those earnings are important, and they're going to be very important over the next 3 or 4 weeks. This week, there is a boatload of speeches. I mean, dozens of central bank speeches this week. Whoa. 33 minutes until Canadian building permits. Oh my God, really? Yeah. We got a interest rate decision coming up. So that could be a doozy, huh? Yeah. I'm just looking at the back end here and see. All right. Yeah, so I just had them do like a tiny little adjustment. You see how it says April 13th, April 13th, April 13th. And then when I start scrolling through, then I'm like, wait, 14th, 15th, 16th. All of a sudden I'm like, what? Wait, what day is this? So let me now publish something I did earlier today. Publish. So if everything is right as rain, we reload this sucker. There it is. Monday. Cool. Monday. It's the little things sometimes that make the biggest difference. Okay. Previous, expected, medium impact, the timer. It's nice. It's simple, but it's nice. And then the next thing is to get you your data in here. Yeah, we have it. I've already uploaded it. It's just not the focus right now. The focus is getting this data, and I think it's going to be a while. Oh, actually not bad. Okay, the modal doesn't work properly. Bank of Japan interest rate decision. Good. I haven't even looked at this. So he's not supposed to, well, I guess you could do a modal. So the data doesn't fit, but let's see. Okay, he's analyzing beat forecast, meet forecast, miss forecast. So what happens to if the Central Bank of Japan cuts interest rates? Okay, it analyzes that. It looks like it has pretty decent data. And he's analyzing the Nikkei. You're like, well, wait, I don't trade the Nikkei. Now, then I look at CAD yen and it says 1,620 pips. Dude, that's a pretty good hour, right? Hang on. And then I'm like, okay, so if they raise or if they cut, nothing happens. But if they do nothing, it'll go up 4,000 pips. Actually, down 4,000 pips. Okay, obviously that's not true. So they're somewhere in there, and then there's one on here. You can see there's a bug somewhere where we pulled some price history, and it said that it moved, 1,000 pips. Okay, not true, is it? So in theory, I can just delete this because I'm a super admin, and we get better scores, but I'm not sure of that. So anyways, we're getting closer, so that all the super important data points, like a change of interest rates or not a change of interest rates at a central bank, we'll have many years of data, but it's not the meet, miss, or beat that matters the most, or let's say takes that much data, because just plotting that on a chart like I want to do here for building permits, okay, that's fairly easy. If you have the data, build a chart. What's the big deal? To get what I'm showing you here in the, like, what is the spike analysis of a spike radar in the things I care about, like interest rates, like headline inflation, like the unemployment rate. I don't care that much about PPI. I care about CPI. Why? Well, all G10 report CPI. Okay. So anyway, so we have all that common thread and the common measures and the common methodology. But imagine now we have to look at candlestick data minute by minute over the course of 60 minutes for years and years and years and years and years of before and after Bank of Japan interest rate decisions, and then organize them, raise, cut, pause, and then break down those scenarios into what happened by on the charts, because I want to know how many pips is this news event going to spike the news. That's why I call it a spike radar, because what I'd like to see, instead of medium impact, all calendars say stuff like that, right? Well, okay. But I would rather, and where we're going here, is when you get to this, instead of Bank of Japan interest rate decision, and it's high, meaning it's high importance. Okay, thank you, Sherlock, for that deep insight, right? Well, we want to have Sherlock deep insight. So what would Sherlock Holmes do? Well, in this case, we'll go back years and years and years and years and years and years, look at all these interest rate decisions and say it's worth 32.8 pips, probably. But if they surprise us, it'll be worth more. And we'll quantitatively keep you abreast of that. Okay. Oh, how can you get to this website? TRADARS.com. Yeah, you can sign up for free. Cool. So anyways, that's where we is. So let's say speech, 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 speech. Speech, 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 and speech. I told you. I told you there's a lot of speeches this week. Yeah. Retail sales of the UK. Great. Tomorrow, PPI. Great. And API, not EIA, API oil. So how come he doesn't? So I told him to include this, but I didn't say API. I was just assuming EIA. Oh, no, he did put it here. Oh, and he did. Oh, okay. No, you did it right. Okay, so this is the one we care about, and he made it red because he's emphasized its importance as being higher, which is really cool. So Empire State Manufacturing, Eurozone Industrial Production, great, great, great. At 10:30 is the EIA. Then the beige book. So these are good. This is nice. I'm enjoying this. Then Thursday, Aussie jobs. Now, and he did this correct. The employment change, I don't want to say, well, how many jobs did the United States add? How many jobs did Australia add? How many jobs did the UK add? How many jobs did the EU lose? I don't want to put that there because it's hard to compare number of jobs versus number of jobs. Because the economies are so much different from each other. But the unemployment rate, the math is much more similar, right? Because it's a percentage. Right? What is it? New minus old over old times 100? Is that the formula? But anyways, so yeah, we'll look at the number here, but the unemployment rate is more important. And so for this, I want to have spike analysis. Okay. Pretty much everything that is dark red here should have spike analysis. Not everything, because it may be an important market mover, but it's not something that I prioritize in our economic analysis, comparative economic analysis, because I can't compare apples to bananas. Okay, balance of trade, we care about that, right? Why do we care about things like trade balance? Because we're trying to measure the economy and compare economies around the world, right? So GDP is equal to C plus I plus G plus exports minus imports, otherwise known as Forex, the flow of currency across borders. Okay? Consumption, investment, government spending, spending by foreigners. So it's how you calculate GDP. And so if you're going to calculate the GDP of the UK, okay, you're going to need to know this data. And so Aiden pays very close attention to it. Okay. PPI out of Switzerland. Sure, that's important, but right? But I prefer any discussion by the Monetary Policy Committee of the Swiss National Bank. Huh? Claims on Thursday. You may or may not have Kiwi retail sales on your mind, but it's coming up. More balance of trade data. Cool. Housing starts in Kenyatta. Yeah. Japanese inflation rate. Yeah, see, we care about Japanese inflation rate. That's one of the majors. Like Bank of Japan interest rates. Okay. Inflation. Inflation impacts monetary policy. So they're actually going to, for the Bank of Japan, they'll probably say a lot because they're hurt almost more than anybody else by the war with Iran and the closure of the Strait of Hormuz. They also tried for a very long time unsuccessfully to create inflation, and then suddenly they have created inflation, and maybe now there's going to be too much inflation. And so one of the thoughts is, will the Bank of Japan intervene and drive up the value of the yen and try to stabilize inflation so that Japanese yen buys a little bit more oil than it used to? If oil's cheap, then you can have a cheap yen. If oil's expensive, and you have a cheap yen, now you have a vicious cycle. And yeah, that's actually a thing. Google it! Actually, don't Google anything anymore. Grok it! Boop, boop, boop. Dollar strong, dollar strong, dollar strong. Neutral. Neutral. And now it says bullish, but like I'm looking at numerators and denominators. You know what I'm talking about? Dollar strong. Okay, flat, flat, flat. I'm going to count that as flat. All right. Yeah, short, medium, and long term. Yeah, all right. How are the yen pairs doing? Yeah, all right. Crypto. Yeah, crypto should be down, huh? And when I say things like that, crypto should be down. So VIX is up. S&P 500 should be down today. Dow should be down today. High yield bonds, yeah. And you don't have crypto? There's no crypto on here. He's forgotten crypto. All right. Well, what I was going to say is it would be totally normal based on what's happened over the last 90 days. Crypto would be down today. That makes sense. As we look at the, so to go through in order, let's say.
Good morning. Let's get you up to speed on the evolving
Spike
market
alert,
dynamic.
1 minute until Eurozone ECB Guindo speech is released. Oh. And we got news in 1 minute. What I was going to say is you should look right away. Right? The VIX is way up. You should know that based on what's happened over the last 90 days, if VIX is up, oil's probably up. Okay? But Bitcoin's probably down. You should know all this. This is what TRADARS says. So I would assume, right, that that's what's in play. Oops.
Spike alert, 1 minute until Eurozone ECB Guindo speech is released.
Thanks, Wayne. Oh, what a weird world we live in. What a world, what a life, I'm in love. All right. So anywho, these are good. These are long-term scores, although we're missing some seasonality. That's interesting. He has to redo his calculations. Shouldn't be too far off, although he's really far off here. Huh? Oh. He's missing GDP and inflation calculations, so I'll have to teach him how to do that. Like, you don't have to do the calculations. We already have the calculations up here. All right. So anyways, those are the scores, and here's our seasonality, of course. But what I want to get to is the COT. Yeah, you know me. Okay. So you look at this, you're like, oh man, it hasn't been updated. It was updated Friday, and Friday's data is from Tuesday, which is April 7th. And it's funny because I fight with him. I'm like, I don't want that. I want to know that you updated on Friday. The problem is, and fighting with AI, it does think on its own, right? Sort of think in air quotes. It says this on the actual report. It reads. So he'll always fight with me. He's like, well, dude, it says April 7th. Like, I don't need to then say if the data is from the 7th, but actually released on the 11th or something. So anyways, I'm like, okay, gotcha. I don't want to fight. I don't want to fight you anymore. It's you that I'm fighting for. So anywho, this is the most current government data. That's all that matters, right? How many people here have already reviewed the COT report? Whether it was Friday afternoon, Saturday, Sunday, Monday. Anyone that good? Every week. Money going into peso. Yeah. Markets net long peso. Still long on Aussie. See, remember back on Tuesday, April 7th, the war with Iran was coming to an end. Okay. Yen got weak. That's risk on, typically. Aussie is strong. That's risk on, typically. Dollar, right? Market is net short. Well, that's typically risk on. Mexican peso, okay, that's typically risk on. So we were clearly in a risk on environment. Now, we didn't like Kiwi, but we were coming to terms with that. So we were buying. The market was less short week over week. Okay. So anyways, kind of interesting. Yeah. Crypto, yeah, some positive flow, but think of this as long-term and think of this as short-term, right? So that first 3 months of the year, was bad for crypto. There's no doubt about it. And the market is still net short, although the flows are changing. The stock market, the institutional investors are still net short the stock market, and they're not really buying as of April 7th. Not okay. Although we know seasonally they may want to soon. You can build your own pair if you want. Okay, there you go. The market is long Australian dollar, short Kiwi dollar. Isn't that nice? Going back, it's supposed to be 3 years. That doesn't look like 3 years. That looks like 1 year. That looks like this year. YTD, huh? So anyways, that's how you do it. We have all the data, so we know where the money is going. Let's take a look at commodities. Oh, money going into food, huh? Well, not wheat. That's the curse of Saskatchewan. Wheat is always not not enough for farmers to survive. Yeah. Corn up, soybeans up. Okay. Now they're not like up. These are net long. You know, how, like, for example, how much wheat is in the silo? None. It's empty. How much soybeans are in the silo? Yeah. 20.9%. 16%. Okay. That's how much gold is in the vault. And then this is the change in those stores of, you know. So, yeah. Yeah. This has been that way for a little bit. That means yields are going up. Yields are still quite high, and that's where we can derive. So money has been flowing the last few days, I guess, into the short end. And the belly is coming out. All right. So, Aiden, what does that mean? It's still risk off. Fed policy, right? The Fed's on hold. Notable yield changes include the 2-year rising 2.5 basis points, while the 1-month yield decreased by 0.9 basis points, illustrating the changing dynamics. Additionally, the long end increased, with the 10-year yield up 8 basis points compared to 0.9 basis points. Drops in the 1 month and 1 year. So he's looking at the shape of the yield curve over time. And so risk off, Fed on hold. Isn't that nice? So you may not have ever measured yield or yield curve or spreads or changes over time of yields, but now you do. And you're like, well, I don't really get it. Well, based on what a multi-trillion-dollar market is doing right now, it's a risk-off scenario, and the central bank's on hold. Excuse me. Isn't this cool? It's very cool. So now, Aiden can actually just watch it for you and explain it to you. It's kind of a cool way to learn, isn't it? I want to back out because you're probably got enough short-term things going on. Think of these, right? Think of these as where we were going. And it could lead to where we will return to go. But today, we are risk off. So I would recommend you go through these charts and square away what potentially was happening and could return as far as market conditions. As we fear less, let's say, in the next 24 hours about what's going to happen with the Strait of Hormuz, maybe it's not that big of a deal. Maybe actually we're liberated. Okay? We don't know. And so if you trade the Asian session, which I'm assuming you did, we had big gaps and all that kind of stuff. And then, not much, actually. We popped and stopped on most of these assets. So today is like, figure out the situation. How bad is our situation? But before you could do that, you need to say, well, what was our situation? And that's why I want you to go through and look at all the position radars. And you can do it for everything. I mean, obviously, right? You can put everything on. But what I would do is I would start with the reserve currency as a measure of risk. Okay? So long term, there's that Euro CAD we were talking about. It didn't look good now, but in general, it's a big fat maybe, but it could also drop to 60. It could drop almost 200 pips for a buy. So the chart's bullish, the bias is bullish, the trend is neutral. Aha! Okay? So we, just back off a little bit and make sure you're doing the right thing at the right time for the right reasons. Okay? And then I want you to play around with the index radar here and see if you can line up the short term with the long term. Okay? So you go back and you look at what has set up since the beginning of the month. Fine. So like maybe it is that EuroCAD that we started today's conversation with. EuroCAD's not now, but EuroCAD could be long later. So one way to use this new tool, is watch EuroCAD here. Okay, it's very, 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 very slightly bullish. Or you can watch it here. Is Euro climbing the ladder? A little bit. What about CAD? Not doing a lot. So EuroCAD up could be good. Just make sure you're not missing US dollar yen up. Kiwi dollar down. Aussie dollar down. Just make sure you're not missing the obvious. Okay? Aussie Swissy. Kiwi Swissy. Don't miss those ones because you're staring at EuroCAD. yeah, you're probably making pips, but it's mediocre compared. But then later on, that EuroCAD could run. So, maybe you get into a trade today, but don't stare at it all day. Just, drop your stop and see if it wakes up. Maybe 5 days from now, it'll be great going in the direction of your long term. Okay? Does that make sense? It's good, right? It's awesome. Hey, and let me remind you, TRADARS is free. Did you know that? It's hard to believe, isn't it? Yeah, much of what you saw today was free. Some of it's premium, but it's not very expensive. Oops. And where's my TRADAR? My Trader's Way. And so I had to cover CYA. I had to cover my assets last night or at the market open. So I think 2 of these Mexican peso trades came out. The other ones are still there. And so now I have to worry about the inverse head and shoulders, you see? And I don't know if that's going to happen, right? You can get the lower low, lower high, lower low, lower low, right? Okay, and then gap up, pull back. This is possible. That would be risk off. And that trades under threat. That trades under threat. But I'm okay because they're carry trades, right? So, and that trade and that trade. Cool. Trader's Way pays very handsomely for these short positions. That's what it's called, a carry trade. Yeah. So some of the Rand trades have come out. Same thing, the risk over the weekend. My analysis hasn't changed. In fact, I still have a trade I want to enter. Interesting. I see why I did it. See, here's what I'm thinking. I normally want to take it off this neckline, but last night I wasn't sure of the level of spikes and all that kind of stuff. So I actually put it off the wick instead of the real body. And I think maybe it was a bigger pivot point somewhere else. But the trade plan's still on. Looks like I probably lost a couple of trades at break even too. Because I'm like, really? I don't even have an open order on this? Really? So I have a working order, but I don't have anything open. Yeah, so my trades got cold. And then how are we doing on Euro? Back that out. Really? Yeah, so I lost a lot of trades. Hey, that's what happens when things change. They were there last night. I must have jammed them. I don't quite remember. Cool. So now as we get close to 1950, do I get short again? Well, I'm going to need some risk on. And the cool thing is I can guess. Okay. I can guess if risk on is coming back, or I can know. Oh. Or I can know. Well, I would rather know than guess. Cool. Peace on earth. May the pips be with you. May your profits be above average. I'll see you tonight, 4 p.m. for the market close. And I believe Meta's got an 8 p.m. today for Asia Open. So still lots to do. Still lots to do today. So I will see you. Have a wonderful day.